Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting now the Asian Session Live Market Analysis and the Forecast webinar. By reviewing the forecast, what I have given it for this week, 2nd to 6th of November. And today we are on 6th of November, end of the week, Friday. So between 5 and 5:30 GMT, I will try to review the forecast, what I have given it. And also we will try to see how exactly the market is expected to behave during this particular weekend time. And also we come across an important event today, namely the non-farm payroll is going to be announced by 13:30 GMT, 30 minutes before the close of the European session. So during that time, the market is expected to be highly speculative and very volatile. So we will see how exactly the market is expected to behave during that time. So I give the forecast for every week on Mondays, and Friday I'll try to review it so that you'll be able to find out whether the forecast is reliable. And also we'll find out how exactly the forecast could be used for your trading, using the market reading as well as the trading strategies. And I have given my contact details here. Dr. of i-knowindices.com is my email ID, and Skype chat ID is iknowindices@hotmail.com. So if you got any doubt after that of the webinar time, you are free to contact me, and I'll be able to certainly help you out in understanding how exactly my trading system works. So there are three components involved with regard to the trading strategy of my trading system. Basically the derived forecast, market reading, and the live market analysis using the initial lows and the highs set around 3:30 GMT. Then we always expect the unexpected. So suddenly if the market reverses and goes against our expectations, so we should not become the victim of such act of the players. We should be in a position to prevent the damage to that of the account. So for that we have a simple trading strategy using the hedging. So first of all, let me show you the focus slide, what I showed it on Monday. So on Monday and Tuesday, they formed up Euro and GBP, and I was telling you that they are expected to make the volatile move during this first week of November, as they have to handle the derivative market. So they could go to the top of the extreme lows and the extreme highs in a short duration and try to induce the traders to go in for wrong derivative trades like options and futures. And also yesterday, for that of the BOE interest rate decision, they quickly made a upward move to 1.54 in the case of GBP, and then subsequently after that announcement they started making the swing and slide move during that of the US session. So now GBP has come to 1.52 from that of 1.54 level, but GBP Euro has already made the slide from that of 1.11 to that of 1.0850 and above. So what is going to happen today? Today is Friday. Swing and firm up move is expected during that of the Japanese session, and then swing and slide before that of the non-farm payroll is expected in the case of Euro and GBP. They could go to close to that of the low, or probably they may make a brief downward stop, and if needed below that of the psychological levels, and try to hit the stops before that of the non-farm payroll, which is going to be announced by 13:30 GMT. As you know that from this week, the daylight saving system is turned off. So as a result, you come across Japanese session is up to 7:30 GMT, and there is a gap time between Japanese and the European for 30 minutes. Then European session starts by 8 GMT. From this week onwards, European session gets over by 14 GMT, and the US non-farm payroll will be announced by 13:30 GMT, 30 minutes before the close of the European trading. And then later on, US session is expected to start by 14:30 GMT and last till 21:30 GMT. And what they are expected to do is they are expected to make a slide before that of the non-farm payroll release, and afterwards they are expected to make a swing and firm up, and then slowly swing and rise during that of the US session. So what they have done for that of the European and the UK data, they made the slide in the case of Euro and GBP, and for that of the US data, they are expected to make the rise in the case of Euro and GBP by lowering US dollar. So this is what you come across the intentions of the players based on the forecast. Then next week onwards, you'll come across the trending move on the upside in the case of Euro and GBP. It might give enormous surprise to many of the traders and also to the analysts, because all are expecting Euro and GBP to make a big downward move during the year-end time. But the players are here to trap the traders and earn money. So in that process, they are expected to slowly gain the levels in the case of Euro and GBP. And for the new year, they are expected to make a very aggressive upward move in the case of Euro and GBP during the month of January and February. So be cautious and always try to see that the market is known to make either way swings, and then we have to sustain in holding positions, or we have to quickly grab profit when the position is making profit. So use the trading strategy to limit the risk, and use the same trading strategy like using the trailing stop and also the trailing take profit order in maximizing the profit. Now, with regard to the levels in which the currencies are expected to swing in this week, Euro was expected to come to that of 1.10 from that of 1.11 area, but it came down another 150 pips to 1.0834 as the low, and slowly they have started gaining the level. So they may make a dip to that of 1.0850 and then start gaining it. And aggressive gain could be seen during the next week in order to compensate all the downward extended stop, and they are done it in the case of Euro. And in the case of GBP, from the 1.5375, they dropped another 175 to 1.5206 as the current low, or 0.5 now. By 1 pip lower, they are trying to hit the stops on the lower side. And then they are expected to gain quickly and compensate the gains during the following week to reach 1.57 area. So don't become simply bearish just because they are showing negative net change, or they are discouraging traders trying to do the buy and sell trade. And in the case of USD-Yen, they came down to 120.16. The expected low was 120.25, and then they come up to that of 122, and slowly they are expected to gain the level to 123 area. Then in the case of CHR, from 98 area, they are expected to go to above parity. So after that of the non-farm payroll, we could see suddenly USD CHF going above that of the parity, or during that of the next week, they will soon do it. And the way in which they are holding this closer to that of parity indicate that they are unlikely to do it today, and they might do it on Monday or Tuesday, go above that of the parity in the case of USD-CHF. And USD-CHF will be hovering around in this level for a few weeks, and then later on only it will try to sustain above that of parity and continue to gain the levels. So similarly, in the case of USD-Yen also, they will slowly gain the level when euro and GBP are also gaining the levels. So that you have to keep it in mind that the players are here to push the denominator currencies upward in order to handle the respective crosses. In the case of Canadian dollar, they came down to 1.3040 and then went up to 1.3187. They are making a narrow range swing and they are expected to make a downward breakout today. And then in the case of Australian dollar, they came down to 71.19, 71.25 was the low expected, and afterwards they are expected to quickly gain the levels, and most likely they are expected to gain the levels today after that of the non-farm payroll. If you look into that of the live market quote page and compare it with that of the initial lows and the highs set during the day, euro formed the low 1.0879. They cut the low by 1 pip and formed 0.878 and started gaining the level. A brief downward dip just to create the market sentiment, bearish sentiment, and then they started gaining the level. And 1.09, sorry, 0.894 is the high that has not been breached. And in the case of GBP, 1.5206 was the initial low. They came down to 1.5203 and slowly coming up. So a brief downward stop, pretending as if they could go below that of 1.52, and that is what they wanted to create their impression, and then start gaining the levels. 1.5220 is the high they are set that is not been breached. And in the case of yen, 121.39 is the low and that is not breached. Actually 121.75 is the high, initial high, but in the quote page you come across 122, that is yesterday's high. So they are likely to already they have gone above that of 121.75. Now it is trading around 121.8283 level. So they have made the breach of the high and go above, and later on they will gain the levels in the case of euro and GBP. Then in the case of CHF, 99.49 is the low, but actually here it's showing yesterday's low 98.86. And 99.49 is the low, and currently it is trading around 99.58, and 99.56 is the high. They just breached that and gone above 99.56 and gone to 99.58 and 59 level. Then Canadian dollar, 1.31457 is the low, which is not breached, and 73 is the high, which is also not breached. They are simply holding it. Australian dollar, 71.38 is the low, 71.58 is the high. There again, they are not breached the low or the high. So they are not focusing on the commodity pairs and the commodity crosses, and they wanted to make them moves. In the case of the majors, now making mostly the contrarian move. And if you look into the live market quote page, you come across euro, GBP, and also Australian dollar are showing nominal negative net change. USD and USD CHF and USD CAD are showing positive net change. So overall, you come across that they are making a brief USD gaining move. Slowly, they are expected to change the market sentiment using the non-farm payroll trigger. So ultimately, we have to understand that the players use such events as the market trigger. Last week, you might be knowing that they used FOMC as the trigger and made a big drop in the case of euro and GBP, and then subsequently weakened. They gained all the levels last week for the month end. So they can use any hype just to induce the traders to take the position and then reverse the market. So market is known to be volatile during the first week and the last week of the month, and they do it mainly to handle the derivative market. So that you have to keep it in mind. Now coming to the law of the trading calls, what you can do, So in the case of euro, so we can make a current market buy $1.0883. Now it becomes a position. Then 30 pips above, you can keep the limit order 1.0913 and the stop for 30 pips below that of the entry level. And in the case of GBP, and this is already buy position 1.5211 closer to low, and 1.5241 is the exit, and the stop is 1.5181 level. Then in the case of CHF, 99.51 is the limit order and 99.81 is the exit level, and the stop is at 99.21. They are likely to go closer to the parity and they will try to create the hype. Then Australian dollar 71.40 is the limit order and 71.70 is the exit, and stop is at 71.10. So these are all the trades I proposed to do it in the demo trading platform, because don't try all the trades, take only one or two positions and see that you don't do over trading by taking too many positions, and also try to find out that you limit the risk using the hedging order. And if the hedging order facility is not available in the platform, you try to use the stop. So don't try to take don't try to convert it into a high risk trade, because when they make a whipsaw move in the market, probably the platforms might attract margin call, because normally the platform people become very aggressive, the brokers become very aggressive during the first week and the last week and try to hit the stops and also attract margin call to that of the traders who don't use stop or the hedging order to limit the risk. So this is the normal practice. When they come to know that the trader is holding too many open positions, they simply freeze the platform and make whipsaw moves and do not allow the filling of the orders and skip it. Then there might be a slippage and suddenly you will find that account is closed or too many positions are closed. So be careful, and when the equity is small, then don't try to take positions during such volatile moves. When equity is good, still you try to commit only one or two positions and the market will continue to give trading opportunities. There is no hurry that you have to take all the positions at one stroke. So you try to take only one position, limit the risk, and when the going is good, then you can commit more positions after that of the non-farm payroll announcement. And also when you understand that they started making the intentional move. Once they start making the intentional move, if you commit more positions and try to keep stop at entry so that your equity is not affected. Also keep in mind the session change time. That is 14 to 14:30 is the gap time. So after that of non-farm payroll, they just make a volatile move up to that of 14 GMT. Then gap time false move they will make. Then session start swing they will make. Only then they will continue to make the intentional move. So that you have to keep it in mind and take positions accordingly. So you will continue to get the trading opportunity after that of the non-farm payroll. Also, don't think that once they rise, they will not come down or something like that, or once they drop, they will not rise, etc. They do it purposely depending upon the stops they come across of the traders. So actually, the holding positions of the traders are being calibrated by the other players, and they try to hit the stops if there are plenty. That is why they are in a position to drop and hold the currencies, and they do it mercilessly during the first week and the last week in order to earn huge profit. Now, This is the slide indicating that when the daylight saving system is switched off, how exactly the market session timings are going to be. So here afterwards, till that of March 2016, we'll come across the Japanese session up to 7:30 GMT. Then 8 to 14 GMT will be the European session. Then US session will be from 14:30 to 21:30 GMT. Okay, then I'll come back on 9th of November, next coming Monday, and try to give the forecast for the next week. And now, in order to give the spike trade call, I'm going to participate during that of the non-farm payroll release today in a group discussion, and also I will try to take about 10 to 15 minutes initially from 13 GMT and give my spike trade calls during the non-farm payroll release, how exactly we can take the positions. And also I'll explain to you what are the precautions we have to take. So I'll give the call during before the non-farm payroll release, that is 13:30 GMT. Then after that, I will also be in the room, FX room, and other experts will also talk about the fundamentals and the technicals pertaining to the release, and everybody is envisaging when exactly the interest rate decisions are going to be taken. So during that time, based on the market move, using the live market code page, I will try to give my suggestions how exactly you have to handle the trades, so that you will have a live demo of how exactly the trades are to be handled when they are making quick moves. Hope this might be able to help you to understand how quickly you have to handle the positions during such event time. Then also these webinars which are recorded, and now you can easily look into them by going to my blog, iknowindices.com/blog, where the link is given. I'll be giving the link. Besides, you go to fxtrade.com. In the home page, you come across analysis and insight. Then you click it, and the next page opens, and under that you click watch list. Then you will come across all the recorded webinars are listed. So all the video recorded webinars are listed under this particular sub-menu, watch list. So the other WebEx webinars are listed in the webinar page, but these video webinars are listed in that of the analysis and insight main menu under that watch list. Then you can also subscribe for the feed of those webinars, and as soon as the recorded webinars are posted, you will be able to receive an email or an alert, and with the help of that, you'll be able to easily look into the webinars which are recorded in the event if you have missed it. Now let me answer to the questions which are asked here. And Satish has got a question. The initial market reading levels at 3:30 GMT is only for the Euro GBP or other currencies as well. So all the 6 pairs, the 4 majors and 2 commodity pairs, the initial lows and the highs are to be noted down, and they are to be compared during the day, during different sessions of the day, to understand what sort of moves they are doing it. In Balaji, can you just suggest on money management equity requirement for small traders to take 1 or 2 positions at a given time? See, normally when the equity is less than $10,000, you can only take the mini lots, and also see that your leverage is less, like 1:50 or 1:100 in the platform. That means when you take one position, the platform should be able to take at least $500 to $1,000. I'm talking about one standard position, $500 to $1,000. And if they take $2,000, then it is 1:50. Then you'll find the balance is available as a free margin. Then understand how exactly you have to limit the risk. And if the platform is offering 1:500 or 1:1000, you might think that they are only taking $50 as the margin, trying to give their a big position, one standard position. But when the market goes against, you find the equity erodes in a very big way, and you are tempted to average it because you find the free margin is available in plenty. Then you try to go in for more and more of accumulating positions. That leads to over trading. So in order to induce over trading, such high leverages are offered by some of the brokers. But NFA has put the restrictions for the platform not to give more than 1:100 or 1:200. But those platform providers who are not registered in major countries, they go into that of the no man's land and try to say something that they are also regulated, etc. They give such offers, and they are basically market makers and trade against their own clients and grab the money. So keep that in mind, and then you try to take positions accordingly. So you can only take 1% of the equity, the positions. That will be very safe. Then John, when I came to your webinar beginning of the year, you said Euro and GBP will rise heavily. We are still at the bottom. Yes, they were expected to gain the levels, and they gained the levels, and then from there they had dropped. And because you come across in the last 2 months of the year, you come across the yearly trend reversal time, and that is why you find such drops are happening. And it will not be a straight linear rise, it will be up and down moves. Then Sherlon, thank you again. Position share, good insight. Okay, thank you. Then Hakan, if the forecast at any given session is not accomplished, does it mean that the forecast is not valid for the current session? Yes, you can invalidate the forecast for the current session and try. That is why we use the trading strategy, because there's no point in blaming the forecast. And we have to protect our position and try to earn from the market. So use the trading strategy to limit the risk. And if market moves predominantly in line with the forecast, you then capture the profit. In the event if the market goes against, use the risk limiting factor and then try to grab the profit. For the whole day or for the, it is for the session, it might be invalidated. But if they do the intentional move, it will be invalidated for 2 sessions and the start of the 3rd session. Depends upon the type of moves they are doing it in the market. So understanding the type of moves, that is why I always say that we use the forecast as a broad outline, then we use the market reading to limit the fact, to fine tune the forecast. So in the market reading, we try to find out whether they are making an extended move or an intentional move. These are all the moves, they alternate with each other. The other type of moves, namely the stop and the false move, they do it only for 30 minutes. And swing also, they do it in the mid session without breaching the high or the low. Only when they breach the high or the low, then we are put into inconvenience. Otherwise, we simply watch it when they are consolidating. We don't get triggered emotionally. So what is more important in this? When they are going to break out on the higher side or the lower side, we should be able to find out during such quick moves whether it is a stop and if it is a stop and it will happen in less than 30 minutes. If it is an extended move, it will happen less than 2 hours. And if it is intentional move, then it will be for 2 sessions on the start of the 3rd session. If they go against the forecast during that time, then you have to invalidate for the rest of the day. Hope you are able to understand how we have to approve or invalidate the forecast from time to time. So if there are any questions, you can ask me the questions. Otherwise, I'll try to conclude the webinar. And I'll come back again by 13 GMT and try to give the spike trade call before that of the non-farm payroll release. And during the non-farm payroll release, I'll fine-tune the call and try to tell you how exactly you can handle the position. See, there is no point in talking about the US economy at that time. My objective is, if you have committed a position during such events in order to maximize the profit, you should know how to handle it. There is no point in simply telling that, okay, the forecast has gone wrong, or I was expecting the non-farm payroll to be up and it has become down and something wrong and market is crazy. These things will not help with regard to your holding positions. And we have to, and whenever there is a big volatile move, profit booking happens in a matter of about 5 to 10 minutes. But the fear is really inducing us to become uncertain. And once you become uncertain, the market fear grips further and we hesitate taking the positions. What happens invariably, after that of the rise, we enter long, or after that of the drop, we enter short. Then we find we are trapped. Having waited patiently, if you are trapped, we become really frustrated. So keep in mind that it is important for us to handle the position when we are already committed the position. Then John has got a question. If I am not wrong, Doctor, you have been calling for rise in euro and GBP since it was around 1.25 area. You are still calling for rise. Probably if you presume it that I am simply biased and giving the call like that, then probably you can simply ignore my calls. That's what I can tell you. I'm trying to understand the market and trying to give the ideas pertaining to the market moves. And as long as I am human, I may be wrong also. So you have to keep in mind. That is why I always say that you should be in a position to read the market appropriately using the appropriate tool which you come across suitable. So when it is not suitable, you try to see that alternative methods are available which could be more suitable for you. Hope you should not mistake me. And as an analyst, without expecting any reward, I am trying to give the forecast here and also giving the trading strategy. And every time I am telling that the forecast can go wrong, forecast can go wrong. And so the trading strategy is ultimately important. That is why I'm giving emphasis with regard to that of the trading strategy. If you become frustrated and it has come down and things like that, and that means you are not followed it, what all I have been talking about, you only taken one portion of the forecast, what I have given it, and then subsequently you try to think that, okay, from there continuously euro will rise or continuously euro will drop. And no analyst will say that because market means volatile. Okay. Now I take this opportunity to thank FX Trade for the facilities provided to present the webinar and for your kind listening. And always keep in mind that I'm trying to help you and not try to misguide. So I can be wrong or my forecast may not come true. And ultimately, you have to develop your own insight and try to see how exactly you can avoid becoming victim of the market. That is the utmost objective of my presentations. Thank you one and all. See you during that of the non-farm payroll release. Until then, bye.